You ready? Yeah, you got me running, you got me running, got me running. Shake it, shake it, shake it, baby. Raise your hands up, raise them out.
All right. Hi, everyone, and welcome back to today's currency call presented by Forex Trading Asia. And hi to all the LCMS Trader Club members that are watching this live as well. And thanks to everyone that did jump on the call last night too. That was quite good with some good Q&A as well to end that session off as well. So, and a couple of trading opportunities as well. But again, this time of year, it is definitely time to just think about, downsizing and really maybe even just having a small break as well from charts as well. But just to get started with today's episode, this is the currency call. For anyone watching this on the YouTube delay telecast as well, we present this call from 11 a.m. Monday to Friday. And the pairs we analyze are as follows. So on Monday, we do the Aussie and Kiwi. We do the Euro on Tuesday, Pound on Wednesday, Thursday, we do Yen and Gold, and then on Friday, CAD and Crypto. And today, the panel will be discussing, obviously, the Euro. With Jin, I'll be discussing the US dollar index, the DXY, and Gim will be discussing the Rba Minute, which were released a little bit earlier, around 2.5 hours earlier, or even a little bit more, just out of the RBA for the Aussie dollar. Now, the currency call, we do aim to go through the market economic updates, and we discuss what the data releases mean and also what to expect from the major news releases as well. We go through the key support and resistance levels, and we discuss trade ideas, and we go into details about the risk that will be taken in regards to stop loss positions and also the take profit positions as well. Finally, a disclaimer: any information shared during this session is not intended to be a trade recommendation. It is solely the opinion and views of the speaker. So please remember to do your own analysis prior to entering in any trades. And as I mentioned just before, we do have Gim on here, currency strategist at LCMS Traders, just to go through the highlights from the Rba Minute. So over to you now, Gimmy.
All right, thank you, Scott. Okay, fresh from the oven, the Rba Minutes. What do we have? Well, basically, nothing new. Okay, nothing new. One point that they actually make, well, it's actually more towards the interest rate side of things. Okay, but before I head over to the interest rate area, okay, let's just go through QE. Okay, so as we know, in February 2022, okay, the RBA, Reserve Bank of Australia, they will actually be revising the whole, well, making a review on the economic situation in Australia, all right? And then they will decide if they should amend the quantitative easing, okay, through means of tapering, or should they keep it unchanged, all right? And in the minutes, okay, well, actually specifically during the most recent meeting, they actually discussed and came up with 3 options, okay, 3 options that the central bank will consider, okay, depending on how the whole economic situation turns out to be in Australia, okay. So let me get the section out. Okay, so where is it? Okay, so it's over here. 3 possible options for the bond purchase program were discussed. Okay, the first option was to reduce the pace of purchases from mid-February with an expectation of a likely end point in May 2022. Okay, the second option was to reduce the pace of purchases and review it again in May 2022. The third option was to cease purchases altogether in mid-February. Okay, so 3 options. Let us just look at it one by one. All right. The first option, okay, over here, which is a reduction of pace of bond purchases from mid-February, okay, with an expectation of a likely end in May 2022, okay. So this option will be adopted, all right, if the inflation and employment situation in Australia is actually consistent, all right, as mentioned here, okay, it's actually consistent with the central bank's November's forecast, okay. It's actually a quarterly forecast. So the next time they're going to release this new set of forecasts is probably going to be in February, all right, but they will have no time to wait for the next forecast to be released before making a decision, right? So they have to base off the November's forecast. So if, okay, everything is consistent, employment and inflation is consistent with the central bank's forecast, then, okay, they will reduce the pace of purchases from mid-February, and then with an expectation of a likely endpoint in May 2022. At the moment, okay, QE is being carried out at a 4 billion Australian dollars per week pace, okay? So chances are, all right, if the central bank is going to adopt the first option, they will likely be tapering at probably 1 billion, okay, per week for 3 months, okay, for 3 or 4 months, okay, from February. So February, they'll taper once, then March, they'll taper once, and then April, they will taper once more, okay, and then by May, they will end the whole QE, okay, hence a likely endpoint in May 2022, okay. So that is the first option, if everything is in line with expectation, okay. Then comes the second option, okay. The second option is, let me see, where is it? It's over here, okay. If the progress, okay, progress meaning the, referring to the employment and inflation situation, okay. If progress was slower than expected, or if the outlook become more uncertain, well, given the current Omicron variant issue, okay, then the case for the second option, okay, would be stronger, which is to reduce the pace of purchases and then review it in May 2022, okay. So they did not actually mention by how much they're going to taper in February, okay, but my take is that they're going to carry out a conservative $1 billion Australian dollars per week worth of bond purchases in February, okay, hence reducing it from 4 to 3 billion per week, okay, and then after that they will put QE tapering to a pause, okay, on hold, and then they will reevaluate the whole situation again in May, okay, just like what they did previously, right? Remember previously QE was held at 5, all right, and then they tapered down to 4, and then they said that we are going to keep it unchanged at least until at least February 2022, and then they carry out this whole review of the economic situation in Australia. So this is the second option is going to be a repeat of what took place probably like 2 months ago, when they tapered from 5 to 4, and then pause the whole tapering for the time being, okay. So that is if the whole situation is this worsening in the whole COVID situation, or progress kind of like stagnated or slow down and things like that, okay. That's the bad situation, all right. Now for the third option, okay, the third option would be this, okay. If better than expected progress towards the board's goals was made, then the third option, which is to cease bond purchases in mid-February, would become more appropriate. Meaning, if the Omicron situation gets better, it's not that bad after all, or maybe like, number of cases decline strongly, and then inflation and employment, situation gets better and better, then, the central bank will put an end to quantitative easing, okay, the bond purchases once and for all during mid-February 2022. Okay, that is the optimistic situation that we hope will be seen, okay, next year. All right. So 3 options for the central banks to consider. Of course, there may be other potential options, like over here, if there were another serious economic setback, maybe like, for example, lockdowns has been renewed and things like that, a different set of options would need to be considered, okay. But anything is possible. As of now, I think the RBA is giving us a pretty clear idea of what they are actually going to consider, okay, months down the road, especially entering into the first quarter of 2022. All right, so that is for QE. Very clear message being sent across, okay. Nonetheless, okay, we can actually expect, okay, whatever options they take out, okay, 1, 2, or 3, we can actually expect a QE tapering to take place in February 2022, okay, during the February's meeting. All right, so it may be the case, okay, that that this whole tapering, okay, of 1 billion Australian dollars per week may actually be priced in, okay, or may slowly be priced in, okay, as the time passes, right, entering into the new year, okay. So just pay attention to this. All right, it's pretty clear of a message that they are sending over here that, you know, we are likely going to taper during the February's meeting, okay. Then on to interest rates, okay. Let me just go back to this part over here. Current market pricing, okay. All right, over here. Current market pricing implied the cash rate was expected to be close to 1% by the end of 2022. Okay, meaning you know, the market in general, they're actually expecting rate hikes, okay, coming in from the Reserve Bank of Australia in 2022. Okay, and if you were to look at the number of rate hikes, you know, the percentage that the interest rates will be hiked, okay. The market's consensus, general consensus, is that by the end of 2022, interest rate in Australia will actually be close to 1%, okay, before rising to a little below 1.75% by the end of 2023. Pretty optimistic view coming in from the market, okay. But members observed that after rising sharply in October, yields had declined earlier in November, okay, after the board's decision to discontinue the yield target, okay, the YCC, okay, yield curve control, all right, and communication by the bank that an increase in the cash rate in 2022 was not warranted on the basis of the bank's central scenario for the inflation outlook. Okay, as I've mentioned several times already, not as bad as Japan, okay, but Australia has been struggling with low inflation for several years already, okay, and it's one of the main conditions that the central bank wants to see, okay, before considering a interest rate hike, okay. So over here, you know, I think Governor Low is making very clear. Dream on if you guys are thinking that we are going to hike interest rate in 2022, okay? So he has put it very clear, and I don't know why the market is still trying to price in cash rate hike in 2022, but whatever it is, if they price in and then they get disappointed, guess what happens? The Australian is likely going to decline, okay? And then hence traders out there, you and me, will have trading opportunities, okay? So not that bad for us traders, I would say, okay? And then as usual, you know, the whole meeting ended with the re-emphasis that the board will not increase the cash rate until actual inflation is sustainably within the 2 to 3% target range. Okay, this line has been, you know, in the rate statement for the past, I don't know how many sessions of meetings already. Okay, and you know, according to the RBA, okay, in order for actual inflation to actually rise to this 2 to 3% target range, all right, guess what? Wage growth is definitely required. Okay, wage growth needs to be materially higher than it is currently. Okay, so basically wage inflation. Okay, because wage inflation will actually drive general inflation up, general inflation higher. Okay, so yeah, very clear message coming in from the central bank. Okay, and the minutes definitely shed more light. Okay, shed some light on how's the whole plan going to be like for February 2022's meeting, okay, when it comes to QE decision. Okay, so yep, pretty much short and sweet for this meeting coming from the RBA. Okay, any questions from you guys on RBA? No questions? Okay, as usual, any questions, just put it in the Ecofin chat. All right, so with that, I'll hand it back to Scott.
All right, thanks for that, Kimmy. And So just going into the US dollar index now, and again, it was a bit of a quiet session last night. I was just sharing my thoughts earlier in the trading floor chat at the LCMS Traders Club, and we, really didn't see much going on. We still obviously have the situation with Omicron as well. And there was a bill that didn't pass in the US. There was an infrastructure bill. They're still negotiating that, so that's causing a little bit of uncertainty and things like that. But really the main thing has obviously been markets now know that their interest rate rise is coming out of the US as well. So it just seems that, and especially this week in the lead up to Christmas, it's just a little bit slow. But just going through what the US dollar did, we did see it pull back to, if we go to the 1 hour, it gives it a little bit more insight, to around 96.30. And, we went back up to trading at around 96.50. And with the calendar as well and what is actually going on, you can see that obviously yesterday was pretty uneventful for the US dollar. And we still just have it's sort of an ebb and flow of Omicron research and what it's showing and which vaccine is better and certain statistics that are coming out of South Africa. But then we also have to consider the different, weather that is around. Like if it's really cold, that's going to help obviously spread. And it's just looking like, especially out of the UK, it's going to be interesting to see what happens with the restrictions if they do bring some in. But we've gone through the CAD stuff. We went through this last night as well on the live trading call and discussed some potential trade ideas. And then we do have the euro coming up with Jin shortly. But for the US, I mean, we're down to Wednesday. There's a little bit obviously going on Wednesday. Today, there's not really much. As you can see, it's just the Red Book index at 9:55 this evening, GMT +8. But for the US, it's going to be interesting to see what this GDP comes out as annualized for the third quarter. 2.1% is expected. And so that, could offer some potential catalyst if we do see beats on that, especially because we haven't really seen the absorption of this Omicron really affect statistics yet, just with it's still early days. And then later we've got, as you can see, Wednesday's pretty busy. And that's really it, honestly. Like I was going through it and it's just a situation where even the personal consumption expenditure prices, that's what I was looking at. That could be interesting as well for tomorrow. But really today, it just could be a fact that it just floats around this area. Now, I just quickly also have noticed the volatility index for the S&P 500 is a little elevated as well. So I'll just go to that now. And you can see that we are seeing this creep back over. So even over 20, there's a little bit of resistance. So it just indicates that as volatility increases, we do see the prevalence of more selling in equities, and that obviously creates a risk off sentiment. And we can see the US dollar helped a little bit higher on that. Sometimes we have seen the yen get some inflows, but we'll see for tonight. It's a very interesting market recently, so it poses some challenges. Now, also the 2-year bond yield as well, and I'll just share that now. So we've got that, and then I'll just bring that up. I'll just stop sharing for 2 seconds, and I'll bring this up. It was on the other. Now, this doesn't really offer a lot of insight because we've seen it, maintain well below 71, which was the highs, with the chatter from the FOMC about what they were going to do. So can't take a lot out of this. And as we lead into Christmas Eve with reduced trading hours, we probably see further slowing down of participation. So just stay cautious. And the euro and the pound, there are some opportunities as well, but we have the euro in focus now with Jin, and I'll hand it over to him now. Nice background as well. That looks delicious.
Thanks, Scotty. That's winter solstice, whatever. What is it called, Gim Hong? What's the festival today?
Yeah, whatever you just said, solstice, winter solstice.
The shortest day as we head into winter.
Wow, I can't look at your background anymore.
But in the Chinese tradition, everyone has this little rice dumpling things filled with peanuts and stuff. Good sweet treat for everyone. So I'm looking forward to that. With that said, caught me by a bit of a surprise. I'll show you what caught me by surprise is if you headed into the Forex Trading Asia website. I was just going to click on that and look for the economic calendar and go, hang on, it's missing. So Chinwei has been a bit busy trying to revamp the site. So he's taken out the economic calendar. There is a couple of things to be done on the site, so stay tuned. We have something quite exciting coming up on that. With that said, looking at the news to be released with the focus on the euro dollar, what could happen, as Scott has been saying, as Kim Hong has been saying, nothing much at all. If you are looking to fire out a lot of trades over this period, you might be a little bit disappointed, or you might get caught out with a lot of fake moves, a lot of retracements before that continuation again. Why I say that is because Tuesday we had the policy meeting minutes from Australia. Nothing much else to be released. We have some CAD news, retail sales numbers, but you can see that these are probably not going to be big price movers. On Wednesday, nothing much again, no big news there. And then on Thursday, right before Christmas Eve, we have the CAD GDP numbers looking like a good turn up from a 0.1 to a 0.8, and the some US numbers, consumer sentiments and all that, but no big price movers, nothing to change, likely to change prices too much. So looking at the charts here on the euro dollar H4 time frame, what we've seen yesterday was the reaction at that 1.1254 level. I think that with the absence of news and with the way the dollar has been moving on dollar index H4 time frame, sitting at this 96.44, 96.50 level, I think we're going to see a bit of a consolidation, possibly even that retrace back down to test 96. Seems to be gravitating towards that 96 level. What we could be looking for here on the euro dollar, absence of news, just based on technical trading, will be that slight upward move towards that 1.1335 level. So what I would be looking for is buying opportunities above 1.1290, buying opportunities above 1.1290, about a 20 pip stop loss for a 40 pip take profit level, a 1:2 risk reward ratio towards the upside. Not a big trade at this point, but I think this would be something that you could get into but manage a little bit closely, because this high point of 1.1335 is a recent high point last week, the week before, and the week before that, but the resistance is still 1.14. So again, looking for that buying opportunity above 1.1290, 20 pip stop loss, 40 pip take profit level, 1:2 risk reward ratio towards the upside. If the euro dollar is going to push up towards that level, what we could be looking for on the euro pound is for a further push towards the upside. It is sitting at the current resistance of 8538. If it does go up, break above, we could see it test higher, but giving you the insight on the pound dollar H4 time frame, it looks like it's going to push back up again. It looks like it doesn't like this point. Past 2 weeks it's reacted off this low point. Looks like it's turning back up. So if the pound dollar does push up, we could see the euro pound sit in consolidation and possibly test back again. So trading within the range like last week, I think we'll see it sit across, test that resistance before turning back down again. At this point, I think that it's a very tight range. There's only a 40 pip move or 40 pip range, I would not be looking to trade the euro pound at this point. I would still focus on the euro dollar, or actually I would choose to focus on taking a bit of a break, bit of a rest. Not a lot of trades at this point. As we looked at the Aussie dollar, like we said yesterday, possibly in consolidation before a test lower. I think we might see that still to be moving. It's still seeing that consolidation, and the New Zealand dollar slowly gravitating downwards, but I think we'll see that consolidation as well. So what you should pay attention to here is a lot of consolidation over this period. If you are looking into the smaller time frame, you're trying to force trades out, you might get a bit sentimental, a bit emotional. Once things starts popping upwards, you might jump into a trade, but only to realize that it trades within the range. So be a bit more careful, be a lot more selective with your trades over this period. Enjoy the festivities rather than try and force out too many trades at this point. With that, I'll pass it back to you, Scotty.
All right, thanks for that, Jin. And I'm just about to share the trade idea as well. But again, if anyone's got questions or they'd like something to be reviewed in regards to the charts that you do see, if something does pop up, please feel free to share it in the LCMS Traders Club, and make sure you visit the Jin Dao Tai website, which is in the bottom of the video if you're watching it on YouTube, to get into the LCMS Traders Club as well. Thanks for watching, everyone, as well, and hope to see everyone tomorrow for the pound analysis. Bye for now.